Hello, ladies and gentlemen, and welcome back to another episode of Investing for the Common Man. This channel is dedicated to helping you save your most valuable resource. No, not your money, but your time. Have you ever seen a picture of a stock chart like this one with all sorts of lines and drawings all over it? Well, this is called technical analysis, and believe it or not, it's a powerful tool that you can use to increase the success rate of your trades. Professional traders use technical analysis to look at the price history on a stock or any other asset to identify significant levels and project possible future movements in the asset's price. Today we are going to learn about support and resistance, the most simple but also the most powerful tool in any analyst's belt. Before we get started, please take a moment to support my channel by subscribing and hitting that like button. Alright, let's get started. Support and resistance, simply put, are predetermined levels at which the price of a stock or any other asset is most likely to stop and change direction. A line of support is a level below the current share price that provides upward pressure and can create an opportunity for an asset price to bounce. When a stock bounces off a specific level multiple times, essentially what is going on is there is a clear consensus from the market that the stock is certainly worth more than the level of support. So buyers step in and provide demand, which causes the stock to move up from that level of support. Resistance is the opposite and represents a level above the current share price at which buyers are likely to become exhausted and sellers will step in, pushing the price back down. The more times that a stock changes directions at a specific level of support or resistance, the more significant we can perceive that level to be. But just because a stock has clear levels of support and resistance does not mean that it cannot break out past those levels at any time. When a stock does break through a level of resistance, that old resistance can become a new level of support and vice versa. Sometimes you will see a stock trading in between a level of support and a level of resistance for a prolonged period of time. This trading range is commonly known as a channel. When a stock breaks out of a channel, if there is not already an established level of resistance above the old resistance, many analysts will take the width of the channel and project a new possible level of resistance that far above the old resistance, which has now become a level of support. Let's head over to the charts and look at a few real-world examples. So here we have a chart of Activision Blizzard, and I want to show you how we can draw lines of support and resistance on this chart to do some technical analysis on the stock. Up here in the top left, you can see this is a 3-year, 1-day chart. So that means that this is a time frame of 3 years, and each little candle represents 1 day of trading. Okay, so let's start looking for some areas where we can draw lines of support and resistance. We're looking for areas where the stock has changed direction. So we'll look at the peaks and the valleys. So the first one I'm seeing is right about here. So let's go ahead and draw a line all the way across, and we can see it's got some touch points later on, right around here. And that's really good. That's what we're looking for. Let's do a couple more. I want to do one right here because I see some peaks right here, and then it became support, and then resistance again, and then I see another line about right here. And then one here. We want to hit these troughs at the bottom. And then there's a little bit of an area around here. We're not really going to use it because the stock isn't trading around there, but somewhere in this area there's a little bit of noise here. And then let's go all the way back and grab one from the highs back here. We haven't gotten up here. Okay, so now let's zoom in, now that we've drawn some lines of support and resistance over the long term, and see how these are affecting how the stock is trading. So this is really the past couple of months, okay? And we can see how the stock trades within these channels that were established all the way back in 2017, 2018. So we have the stock trading in a channel here, and then it breaks out through this resistance, and then this resistance becomes support again. So it bounces once, twice, 3 times, comes up here, sort of makes it through this resistance, but turns back around. And you have to remember that support and resistance aren't exact to the penny. So when you have something like this, you can watch really closely as it's happening. But if you don't see a decisive breakout, then this could just be, it just slightly going beyond that resistance and then falling back down. We see it hit support again, comes back up resistance, and then it drops out of this channel back into the previous channel, moves around a little bit before breaking out again, back into this channel, breaking out, and then this resistance becomes support again, at which point the stock continues to take off. Right here we have a earnings report, and this was a massive earnings beat. So we see the stock take off. So now we're looking for our next area of support and resistance because we want to know what's going to happen in the future so we can trade. And we don't have a lot of data, but if we do back up, we had this one point all the way back here. We had some peaks here. So this might be the next level of resistance that we might look at as this goes up. The other thing we can do, let's zoom out a little bit. There we go. The other thing we can do is take the distance between these two, how wide this channel is, which is about 63 and 57. This is about $6 wide. So we can go up another $6 to about 69. And we see right there something happened, but then we might go again, another $6 wide, 75. That's about where we are now. And then this is maybe another $6 wide. So you can see how these channels are about the same size. That tends to happen. It's not always the case. But for a concrete level of resistance, we can go all the way back to 2017. And this is the next level that we're really watching. And if it gets up here, we might watch for a bounce to see if it bounces back or to see if it breaks through and continues to maybe take out this high. So that's how I might use this to look at ATVI. I want to do one more example with Starbucks, because Starbucks actually has a really interesting chart that if we look at this past economic downturn in the past few months, there's some really interesting information here. All right, so we have this. I want to just focus on the past few years here and set up our lines, okay? So we've got some support about this level. We're gonna set that up, and then what I'm gonna do is tell this to extend to the right. So that's gonna extend that line all the way over on the chart, okay? And then we've got another area right about here. Yeah, so I'm seeing something right here. You see it bounces off this line here, and then it uses it as support again. So let's put that one in, and let's extend it to the right. And then this is a really interesting level because it comes up, turns around, then surpasses it, but then comes back and touches its support. So I'm going to draw a line right there of support and resistance and extend that one to the right. And then this seems like an interesting area right here. So what I'm going to do is just draw a little line, and we'll see if anything happens later. I might not pick up on this if this were happening concurrently, but since we know that there's some future action, let's extend it to the right and see if it does anything, okay? So now I want to advance the chart, and let's look and see what happens, okay? So we have this area of support right here. It doesn't quite touch, but it comes down near and then comes above. But then we have this economic downturn that we recently had due to COVID-19 and all that. We had to close Starbucks stores across the globe. There's all sorts of pressure on the restaurant. So we see here, when the crisis starts, it sort of comes down. Let's zoom in. There's a little bit of noise right here around this first area of support, but it breaks through the second level of support, sort of moves around a little bit, comes back up and then down, breaks through the third level of support, and then finally finds support and actually holds the support that we established way back there before coming up. Then it comes up, sort of trades around in this range for a couple of days, breaks into this second channel here, and then breaks into the third channel. And so that's where we're trading right now. So if I were going to trade Starbucks this next week, I would be watching this very closely. If this comes up here and then bounces off this resistance, I might go short the stock or use a bearish option play to expect it to come back down towards this level of resistance. But if it broke out, if we had a significant move and it came across here, I might take that as an opportunity to get long the stock and see if maybe we can get some upside potential after it breaks through this level of resistance. Okay, so let's zoom out. Where did we set up that low again? We'll go back to the 3-year chart. This is all the way back 2017 to February 2018, and then we had some more action here later in 2018. This is the level that ended up holding here. When the stock dropped and just plummeted, it held up with this level of resistance. That's how powerful support and resistance can be. So you can use this when you're trying to plan a trade, or maybe just trying to understand maybe where a stock has been and what levels were significant when you start to do your research before you even make trades. It's good to do this sort of analysis so you know what the key levels are. That about wraps it up for drawing horizontal levels of support and resistance. If you learned something today, please support my channel by subscribing and hitting the like button for the YouTube algorithm. For those of you who are new to investing or use one of the basic beginner-friendly investing platforms like Robinhood, M1 Finance, or Acorns, you might have noticed that they do not offer any tools that allow you to do technical analysis and draw lines of support and resistance. If you're watching this video, it might be time for you to upgrade to a better broker that offers more professional tools. The charts I used in this video were from TD Ameritrade's Thinkorswim platform, which is always a great option, but can be a bit intimidating if you are coming from Robinhood. A good stepping stone for you could be WeBull, which offers an aesthetically pleasing and polished user-friendly interface and commission-free trading, but also offers all of the charting tools you'll need to do technical analysis. You can draw lines of support and resistance on a chart, and those markings will be saved indefinitely so you can refer back to your analysis at any time. They also have all the other major technical studies and indicators like moving averages, RSI, MACD, and more. WeBull offers quality trading software for both Windows and Apple's computers, as well as a mobile app optimized for both phones and tablets like the iPad or Surface Pro. It is clear that WeBull is working really hard to convert market share from Robinhood, who, let's be honest, has not been doing great lately with all sorts of legal issues, system-wide crashes, and poor customer service. So WeBull is constantly offering all sorts of promotional incentives and ways that you can benefit even after you open an account. When you sign up for WeBull and deposit $100, you will receive 2 free stocks that could be valued up to a total of $1,600. WeBull will also reimburse you up to $100 for any transfer fees that your old broker might charge to move your entire portfolio over to your new WeBull account. In addition, for the next month, if you refer one person, maybe your spouse, a friend, or family member, you will get another 3 free stocks valued between $1,200 and $1,400 each. That means that if you open 2 accounts or 1 account and refer a friend, you will receive an absolute minimum of $50 in free stocks, not to mention the extra 2 stocks that your friend or family member will receive, and those could be worth a lot more than $50. WeBull also periodically holds paper trading competitions where you can receive gift cards for practicing trading with fake money. That means that you can earn rewards while honing your skills and not risking a single penny of your own money. If any of this information sounds interesting to you, please use my referral link in the description below to scoop up those free stocks and support my channel. Until next time, keep calm, stay healthy, and happy trading.